Good morning, everyone, and welcome to Power of Attorney with Latanya Moore. Guys, I am super excited about today's show because I have the fabulous opportunity of having Mr. Safir Malik, who is a CPA. He's actually my CPA. He's also the Chief Financial Officer of the Jones Accounting Group. Now, Mr. Malik has an expertise in resolving tax matters and representing clients before the IRS. Hopefully, you guys don't have any of those troubles. However, I asked him to come on the show today, guys, to talk with us about the new tax changes and how those tax changes are going to affect people like little old me and big old y'all. So please help me in welcoming Safir Malik to the Power of Attorney Morning Show. Welcome, Mr. Malik.
Thank you, Ms. Moore. I appreciate the opportunity to be here this morning. Just kind of educate your guests on the new tax laws that are going to really affect everybody.
Oh my God, you sighed now. You did a sigh. You did a sigh. And it didn't sound like a sigh of relief.
Some more than others. It's going to really affect a lot of people. Some in a positive way, some in a negative way.
Whoo. So let's do this because I know that we're going to talk about individuals, some of the things that individuals may not know about that really are going to have some impact. And listen, guys, he can't talk about every single thing today. And I think that we know that, but you will have an opportunity to connect with him after the fact so that you can set up time for your consultation about your tax matters. So please just know that. Also, you may drop questions in the comment section, and even if we don't get to them live, we are going to be going back after the show and making sure that we're addressing those. So I just wanted you guys to know that up front. So, Mr. Malik, start with some of the taxes or tax changes that are going to be affecting individuals for this tax year.
Well, the first thing is that they actually raised the standard deduction. It went from $6,000 for single individuals to $12,000. It went from $12,000 for married individuals to $24,000. So with that being said, they eliminated a lot of the other items, such as the exemption requirement for individuals, as well as for if you're claiming your children or you're claiming other dependents, such as your husband, your wife, your grandmother, or stepfather or cousins. They eliminated that dependent exemptions for people. So with that being said, when I did the calculations, the average individual tax liability is probably going to go up anywhere between $800 to $1,000. They also eliminated the educator expense credit, where they give school teachers that would buy school supplies for their classrooms. Normally they would give them $250, and then you could actually go, and if the expense were more than $250, you can actually go on form 2106. And I know I may be spewing out these forms like people actually know them, but let's just say if that school teacher spent $3,000 on school supplies, well, on the front end of the tax return, he or she could only write off $250, but on the back end, they could write off that remaining portion, the 2106. So that's been eliminated. So a lot of things with individuals, as such as the cap on your mortgage insurance, your mortgage interest, they put a cap on that. If it's more than $10,000, that's the max that you can write off, which some people it's not going to hurt, but majority of my clients, it probably will hurt. So overall, like I said, the individual tax bill is going to go up anywhere between $800 to $1,000.
Wow. Now, let me tell you why that is really just, I'm just sitting here like, what? And because you would think that they with everything, you would think that the desire would be to have dollars back into the pocket of the average consumer, but it sounds like from an individual standpoint, all of the things that help people go from class to class, right? In upward mobility are the things that's being affected. Is that a good assessment of sort of what's happening? What's your take on that?
Well, yes, it is. And what they did, what we have to understand, when we saw it on the news where they took the corporate rate, and which was originally 35%, and they dropped it down to 21% or maybe 20%, they had to take a lot of things away in order to do that. And so a lot of the things that they took away affected working individuals. And I'm not political or anything, but I will say this. I told my clients, I told just friends that if this president got into office, that I knew that he was going to implement a tax plan that was very, very, very business friendly. I've been a CPA for almost 20 years. And this is probably the worst tax plan I've seen as far for individuals in my entire career. Now, businesses, great. That's, I mean, very, 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 very good incentives for businesses. A lot of loophole for businesses. It's just that the individuals were the one that actually kind of got it on this end. Unless, and like I said, I'm not political, but I've been hearing talks of the Democrats actually trying to come in and actually, repeal some of the things that were actually put in place. And, hopefully they can do that. I don't really get into all the political sides of it, but hopefully they can do that, and it will really help a lot of individuals.
Okay, so I'm sorry, I'm having some technical bottlenecking on my end. Can you still hear me?
Uh-huh.
Okay, great. So here's I think what is really interesting. So, my group, right, tend to be people that are in several different categories, but one of the main categories of people that I deal with are people that sort of like they work, they have their business on the side, right? What are some things that if they haven't done it or if they didn't do it may negatively impact them as a person that, you got your 9 to 5, your day job, your W-2 job, as some people say. But then on the other side, you got, the other things that you're doing. If you're a private consultant, you have your 1099, all of those. What are some things, how is it going to affect the side hustle group?
Well, it depends on things that they've put in place. If they have everything in place, such as if they went out and, let's say, for example, what I call don't be a paper business. That's let me just start out that way. Meaning, don't just have your business set up on paper, but you haven't done anything as far as purchase equipment. You haven't spent any dollars just besides setting it up. That's really not going to do you any good. For those who have took the proper steps and did everything as far as with setting it up, we know every day, all day, that businesses operate. You have to buy equipment, you have to buy things, you have to purchase things. For those who are actually purchasing items for their for their businesses, they can actually expense those items immediately instead of having to wait. So if they went out and purchased new equipment, new computers, or anything like that, instead of having to wait the 3 years or 5 years or however the IRS deemed the useful life of that asset, they can actually expense that item immediately. Even if they went in and had someone come in and do a lot of interior work on their business, they had to refurbish an office or whatever, those items can be expensed immediately, which drastically lowers their tax bill.
Wow. So this is what I like about the conversation that we're having today about this, because I think that people watch the news and they don't go any further, or they get information, but they don't go any further to say, how does this really affect me? Now, I know that you've gone over with us about the things that that's going to be good For us, someone in the comments said people need to start setting up more S corporations. I want you to speak to that before we really get into the meat and potatoes of what these tax changes mean for businesses.
Well, I mean, the S corporation is a good it's a good business structure. I personally, professionally, that's what our firm is set up as an S corporation. Because really the business, everything passed through the shareholders. Everything passed through the shareholders, the profit, the losses, and those things are allocated based upon the percentage of ownership. The S corporation is not taxed at all, as well as you still have that protection. You still have that corporate protection also. And depending upon what state you stay in, for me being in Alabama, the only thing our firm have to pay is just that $110 a year for operate in the state of Alabama. So the S corp is a great pass-through entity. It's a great way to kind of shift some of the tax load also, as well as bypassing the self-employment tax, which is 15.3% right now. So it just depends, on what the actual individuals are doing. But yes, the S corp is a great business structure, and I think that they will keep that around for a while because it benefits a lot of people.
So let's say that someone. So wait. So let me ask you this. So in light of these new tax changes that are business friendly, how does the S corp benefit in conjunction or in comparison to, let's say, the LLC, right? Because sole proprietor is that's just you, right?
Yeah. Mm-hmm.
That's just you, and you say you got a business, so we ain't talking about that.
Yeah.
But look at the S corp versus the single member LLC, or even I guess because the multi-member LLC is more like a partnership. Talk a little bit about. Okay, y'all, let me ask the question right. Talk with us about how these new tax changes are going to impact the LLC, the partnership, and the S corp as people go and file their taxes, their 2017 taxes.
I mean, well, across the board, since all three of those are actual businesses and business entities, they will still benefit from the new tax laws. Now, when we get into the actual individual structure of each one, that's where it gets tricky. So they would still benefit if the partnership goes out and buys new equipment or have a lot of work done to the actual building or any assets. All those items can be immediately expensed. Like I said, instead of having to wait the 3 years or 5 years or however. That's across the board with any business entity. When we get into each entity, as far as the tax wise, like I said, the S corp, there's no taxation. Everything is just reported, and in the income and the losses are passed through to each individual shareholder, and it would be based on the percentage of ownership. So, for example, if the S corp made $100,000, it spent $50,000, and it has 5 partners. Each partner, if they have equal share, then each partner will actually get $10,000 reported on their K-1 form, which will flow to their individual form. As far as for the LLC, you're still going to be subjected to the self-employment tax, which is still 15.3%. So you're going to be subjected to, that's an additional tax on top of your regular income tax. So the LLC, which I initially started out as, and then I eventually switched over, still is subjected to additional taxes. However, if they went out and depreciated everything properly, if they went out and, saved their receipts and everything that they did, then it's still going to be better than the actual individual. And the same for the partnership. They get the same benefits. The tax just depends upon the percentage of ownership for each individual partner. And one thing noted, the partnership and the S Corp, depending upon the role of the partners, if they have what we call a material role, meaning that they're actually there working in that business every day, they could be subjected to additional taxes. If they're just someone that just invested, then that would be considered passive income and they won't be subjected. It'll be just a regular rate. If they made a profit, the lower rate probably be about 10%. Either way, it is still better than the individuals if they did everything proper the way that they were supposed to do.
Right, which that's code for, did you contact a Latanya Moore or a Safir Malik to go over everything and make sure that your stuff is set up right, so that versus going to some of these online sites. Y'all know, listen, I told y'all 2018, I'm keeping it real. I ain't got time to right? I'm not playing in 2018 because this is really about moving forward. We have to be vigilant. We have to reach out to people. We have to pay people for their time to help us get our businesses together. So I have to put that plug in, Mr. Malik. I do apologize. I know you're a very conservative guy. I really appreciate that. He's been my CPA for multiple years, so he knows me, and he just ignores my behavior. But okay, so let's kind of move into what are the advantages for business owners, because after our consultation really about the changes and what was happening, I kind of felt like, I ain't gonna lie, transparency, y'all. Man, it's great to be a business owner, right? Like, I kind of felt like that. I was like, okay, wait a minute. It's great to be a business owner, even being a very small business like myself. So talk with them about what are the benefits that have come along now with these new tax changes for people that have businesses that are properly structured.
The biggest benefit now is that you can actually pretty much make more money, pay less taxes, and still get more benefits. And at the end of the day, I mean, and what I mean by that is, you can have someone that's a business owner that may have made $1 million a year. Okay. An individual may have made that $1 million. That individual is still going to be subjected to that high tax right now. They'll probably end up paying maybe anywhere between $300,000 to $400,000 in taxes. That business owner, hey, they may pay 10 or 15% on those dollars. So, but that does depends upon if they have put every system in place. So once again, we go into the depreciation, we go into, buying the assets. If you contacted someone like Ms. Moore, those are fees you can actually write off. Those are professional fees that you can write off on your tax return. Or you contacted me, you can actually write off my fee on your tax return as professional fees. So the benefits are just really great. A lot of the incentives that they stated, the reason why they did this tax bill, like I said, I'm not political. I'm not at all. But
that's called for they ain't there, y'all. It ain't gonna happen.
Yeah, basically. So.
Listen, Mr. Malik, we are not in your office. My people want you to just go ahead and let them know you don't have to be politically correct. He ain't political. He doesn't have to be politically correct. He is a professional, right? He is a professional. However, I ain't trying to push him in any type of way. I'm just letting him know. Listen, everybody, they either at work, they got to get back to their business. They just want to know the skinny. Okay. Benefits that they told you that was going to be there are not there, which is why it is imperative. I just saw someone posted on the comments that they did some things themselves. Here's the deal. If you want to do it yourself, let me tell you guys, this is a service that I offer. It's not to promote services, but if you want to do something yourself, at least pay for a legal or a CPA review, because somebody like me is going to say, well, add this, right? It's better to pay that $225, sit down with me for an hour for me to tell you, well, this is what you need to add, and for you to go ahead and do it, because that's still going to be cheaper, right? Than me.
Exactly.
right? Because you're really paying for a contract or legal review and consultation. Nobody's doing it for you. But the bottom line is, regardless of how you pay that money, you keep that receipt, that paid in full invoice. At the end of the year, when you take your taxes to Mr. Malik, now that money you get back. Because guess what? If you bought an operating agreement online, you ain't getting that money back. That's just like buying a birthday card. Am I right?
I mean, you're right. I mean, because at the end of the day, like I say, if you sit down with an actual individual and consult with them, those are professional fees that we can actually write off. And I always tell individuals, my clients, do not try, and this is not to insult anyone's intelligence, but do not try to set up your business on your own if you don't know what you're doing. You will come out better.
You don't know what you're doing. Don't do it. Like, just don't. I get excited about this because, listen, how many years have we been discussing this? This is what you don't understand, guys. You do it on your own, you get into some trouble. You could have paid me $850, or I'm just making this up front, right? So that when you got in that trouble, you wouldn't have never got in it. Now I gotta fix it.
Yep.
And get you out of trouble.
Yep.
Right? And then I gotta then turn around and send you to Mr. Malik, who's gonna tell you now what are gonna be your tax consequences and liabilities for this error. So you will pay one way or the other thousands of dollars that you could have saved. But here's the thing. But then that same $850, you could have wrote it off and you would have never had this problem. You really, guys, you gotta be proactive. You must be proactive. I'm gonna tell you, I got so many people that have been reaching out to me like, well, I'm like, did you watch the video? Because I had somebody that told you what to do. You didn't have to pay me for it. Just this is what we told you to do, and you still didn't do it. So, right? So what happens is, this time of year, I'm gonna speak for him because he ain't gonna tell y'all this. This time of year, he always have hundreds of people, correct me if I'm wrong now, because I don't want to exaggerate, coming to his office with messed up problems. And it all stems back to, they didn't say, oh yeah, you can't deduct that because see, you didn't do this step, right? You can't do that because you didn't do that step. So you may have $15,000, $20,000, $5,000, $500 that you just spent with no way to recoup those dollars, even if it's a deduction or some type of tax credit or some type of benefit to you from a tax standpoint, because you did not invest the dollars up front in as minimal as a legal or a CPA review. Now, y'all, he big time, right? So I'll tell y'all that. He big time. His fees a little bit more than mine. I'm not saying come to me, but if you want to be economical, it's a little bit cheaper. A little bit cheaper to sit down with me for an hour than Mr. Am I making this up?
No, you're not making it up.
See, he trying to be coy, y'all, but here's the thing. I wanted to bring those points home because these are the things, unfortunately, that you need to hear, because that's the stuff that's going to get you in trouble, right? I know we're talking about the tax change and all that. He's told you guys about what the benefits are going to be. Some of you guys are teachers, or teachers, or your children are teachers who do this very thing because they want their kids to have the things that they need. Some of these teachers work in poor school systems where, unfortunately, the parents don't have the money for all of the things that the kids are going to need. So the teachers pick up that slack. There's no slack now. So one of the things that I've been encouraging people to really do going into this second semester is that why not have a school supply drive in the middle of the semester? Work with a local nonprofit that's properly set up with a 501c3, and then you take your tax deduction letter, Mr. Malik, right? We have to be creative, guys, when faced with situations like this. All is not lost. But now, what's wrong with helping a teacher out? What's wrong with taking the burden off the teacher? What's wrong with saying, you know what, Mr. or Miss such and such, here's $15. Or guess what? Go spend your own $15 and buy supplies and give it to the classroom, because at the end of the day, the job is hard enough. But that's one of the things. Now,
Mhm.
tell me though about when you work at a school, a university. It was something about that. Talk a little bit more about that, because I know something about
Yeah.
to go for free. Tell
Here,
people about that, because that's a trip.
yeah, here's the thing with that. Like I say, under this new tax law, individuals, and I have several colleagues that teach accounting at a lot of universities, here in Alabama. And I have a colleague, she's a CPA, and she actually teaches at Troy University. And so I called her. I said, hey, I need to talk to you about the new tax code. And let me just throw the disclaimer out. Just because she's a CPA don't mean that she actually knows about taxes, because we all specialize in different things. So
Just like lawyers, just like
yeah,
doctors.
so the stuff that she does, I don't do and don't care to do. Don't like it. So I like taxation. So I called. I said, hey, I know that you teach school, and I know that you're teaching there because your son actually goes to school for free. So I told her, I said, I know right now, I'm not saying no name, but I said, I know that right now you're making about $100,000. She was like, yeah, I said, that's great. And I said, I know that your son goes to school for free, and the tuition there is roughly about $30,000 a year. And she said, yeah, she said, that's why I've been teaching there as long as I have. I said, well, I need to tell you, under the new tax law, his tuition is going to be viewed as a fringe benefit for you. So what they're doing, if you teach at a school and your child goes to that school for free because you teach there, that tuition is going to be a fringe benefit. Meaning, in her case, she made $100,000 a year. His tuition was $30,000. Now she's going to be taxed on $130,000 because her son goes there. They're actually taking that tuition and adding it to the actual person's income, which increases their tax bracket, increase their income tax. Now they're subjected to additional taxes. Once I said, like I said, this plan is not individually friendly at all.
Code interpretation.
So
you have moved into another tax bracket that you didn't
exactly.
anticipate. Even if as an individual you itemize your deductions versus a standard deduction, because what's been put out is that, well, that additional standard deduction is going to alleviate that. Not when you taxed on an extra $30,000.
Not at all.
You may get a benefit if there's just a $4,000 or $5,000 increase, right? Other than that, it ain't gonna help you. I mean, that's real talk. Because think about it. On the other end, if you are a professional in that situation, you own a home, you have all these other things that you used to be able to deduct. You can't deduct those now. So that standard deduction actually is going towards those taxes that are now that you still got to pay. So it's not really, you know what I'm saying? It's not really helping you. Now, speak to this, because we just got a couple more minutes left. This is important. We're gonna have to have you back very soon. And I know I've been doing a lot of talking because I'm interested in this and it. Yes. So listen, talk about the state and local taxes, because there used to be a way to deduct and now there's something different. Tell everybody about that part.
Yeah, they placed a cap on that also. It's a $10,000 cap where, as far as with your state and local taxes, your property taxes. And like I said, I'm in Alabama. So Alabama property taxes are relatively cheap compared to other states. The problem with that is, for those individuals that are in New York, that I have, California, some of your higher areas like Chicago, it's going to hurt them. Because at that $10,000 cap, that's all that they can write off, versus them being able to write off $15,000 or $20,000, which lowers their tax bill. So, that really depends upon your situation. If you're always below that $10,000, then it's really not going to affect you. However, if you're above that $10,000, now you have to go in and do more strategic tax planning. And I'm just going to be very candid with this. From a business standpoint, this bill is really going to increase my business, because now you have to have that tax plan. You have to have that tax planning in place in order to be able to navigate around this system. And I've been saying this for years, that the income tax system was never designed for the working individual. It wasn't. This president has made that known with this tax bill, but it has never been designed for the working individual. The way the IRS look at it, I'm just going to be candid. The mindset is we give all the benefits to the businesses, because businesses are the ones that employ people. A poor man never gave anybody a job. And that's actually in the actual IRS internal code. One thing I do need to address is the child tax credit. We didn't speak on that. The child tax credit. Now, they actually increased that from $1,000 to $2,000 if you're claiming a child that's below the age of 17. Now, everybody, may be happy about that, but once again, with them increasing the itemized, the standard deduction, is actually going to lower your tax refund by them doing that. So you won't be entitled to the whole $2,000. It really depends upon your tax situation, how much income you're actually taxed on. Once again, not individual friendly at all. It has been my thought that, I always tell people, hey, set you something up on the side, to reap the benefit. You have to change the facts of your situation. This system was never designed for the working individual.
Right.
And the people who, we have to think about the people who actually make the laws. It's not the IRS. The IRS is just the enforcement agency. That's it. It's your Congress and your Senate that make the laws. And they're not going to make any law that, number one, they're going to hurt their constituency or it's going to hurt them.
Yeah.
They're not. So, as much as we would like to think that they are working for the common individual, we're thinking the average senator or Congress have a net worth of about $10 to $15 million. So, of course, they're going to implement things that are going to benefit them.
Yeah.
And that's just the fact.
Right. Yeah. But here's the thing. Now, for those of you that are watching now, and those of you that are watching on a replay, y'all don't have to tell us, but I want you guys to ask yourself, it would have been really nice to sit down with Mr. Malik at the beginning of the year, pay $350 for his 1-hour consultation. I'm gonna tell you how much it is. I told y'all it's more than mine. You got me. I ain't mad though. I ain't mad. But I do have to point that out. But seriously though, wouldn't it have been nice to spend $350 early in 2017 to sit down with a plan so that you knew what to do the whole year, so that if this did take place, because remember back then we did not know, all of us that heard about it had some anticipation about it, right? Those of us that paid attention. But where would you be? Why am I telling you that? I'm telling you that because this is what I've been saying for over a year. You must get out in front of things that's going to negatively impact you and your family and your business. Very important, very vital that you sacrifice those dollars up front so that you're in a better position on the front end, right? Mm-hmm. We're going to be getting together. It's tax season. Don't expect to see a whole lot of Mr. Malik. He's gonna be busy. However, you guys can reach out to us. You can put hashtag I need a consult. That way he'll know, he can go back and see who needs what, and he can share his information so that you guys can go ahead and set up an appointment for a consultation about what's going on. If you don't have a CPA or a qualified individual, no shade to the franchises, you can't afford to do that this year. You need someone that is intimately knowledgeable of the tax code. I'm not trying to throw him 2,000-3,000 people, but this is what I'm trying to do. I want for those of you that are serious about getting yourself in a good tax position, the best position you can be in this year, knowing the things that you know now, and we haven't even covered everything. We just covered the major stuff that the average people are going to be hit with. And then looking towards getting yourself together for next year, right? What are some things that you can put in place? Go ahead. You can reach out to me. If you can't get him, you can reach out to me. Better yet, reach out to me, and then I'll help you coordinate or facilitate an appointment. That way we can do that. For those of you, you already know how to get in touch with me. You just let me know. Now, don't let the fact that his fee is more than mine deter you from reaching out to him first. If you know that you need to talk to someone about a tax plan, right? If you need to talk to someone about a tax plan, that's what you need to do. So one last thing before we leave, what is something that you would like for our viewers to take away from today's conversation that they can use to improve their tax situation?
I would say that they need to really think about, and this may offend some people, but it is what it is. A lot of people, especially within our community, we always think about the earned income credit, getting the big refunds. And to be candid, to me, that's a poor man way of thinking. My high net worth client, they don't think that way, you know. So my thing is start developing, you know, your tax plan and incorporate that into your wealth building plan. You know, and what I mean by that is, you know, I don't mind paying the taxes that I pay, but like I say, with me being in a business, my tax bill is lower than the average individual anyway. So if I've made $1 million for the year, and if I only have to pay $5,000 or $10,000, I'm fine with that. I'm great with that, actually, because I know I can write those, you know, that tax bill off. Versus an individual that may have paid $10,000 into the system, but you get a refund back of $5,000. You think that you got some money, where actually you still operating at a deficit.
Yeah,
because you gave away 10 and you only got five
back. Yeah.
You know, so we have to change our thinking about our tax situation, you know, and really implement good tax plan and use that to help generate wealth.
Yeah.
You know, I said I have no problem paying a $10,000 tax bill if I made $1 million.
Yeah.
And I knew I was supposed to pay back 300,000. I have no problem with that. Let's write the check. Versus, you know, if I paid 10,000, I only got back 5,000. But sadly, that's a lot of people thinking, and that's a poverty way of thinking.
Absolutely. And thank you for that, because here's the other thing I want to say about taxes in general. So you heard all the things that he said. So for those of you that's selling plates, you selling CDs, right? Or t-shirts or whatever, right? You on the side of the road, you got your hustle on, nothing wrong with that. Get a business license, for God's sake.
Exactly.
Business account. Get credit for this hustle. But see, the problem is you're afraid of sales tax. So you're talking about a 9% tax that's a pass-through tax to the customer. You don't even pay that money. You still get all of your money. Like, listen, guys, if you got an item that's $15 and the tax is 10%, right? The customer is gonna pay $16.50, right?
$16.50, yeah.
The customer is gonna pay $16.50. You listen, take that $150 and put it, $1.50, put it to the side.
Mm-hmm.
Right? Because what that's going to do is, by doing that, that is going to help you avoid some of these other things. But guess what? Then that same $1.50 that you didn't pay yourself, that's the cost of doing business. This is why you need to come to a Latanya or a Saphir that can share these things with you step by step. This is what you need to do. Here's the thing. Sometimes you can pay for a consultation. Somebody will tell you what to do, and you just go ahead and do it. If you don't have $2,000, the $2,000 minimum to talk to me, I ain't gonna tell y'all his minimum because I don't want to scare y'all. Just do the consultation, right? But if you don't have that minimum to sit down with me for me to do it for you, right? Think about what you do have to sit with someone that can go over what you need to do. And then you just do it. And if you have questions along the way, you just kind of pay as you go. I'm telling you, I know lots of professionals that do that. Most of them aren't lawyers. Most of them aren't CPAs, but they are qualified individuals that will do that, that will assist. If you need assistance in that area, like I said, you guys may reach out to me. If you want, you can reach out again to Mr. Malik. Just put in the comments that you want one of us to reach out to you. You want someone to contact you so that you can do your tax planning or whatever. So again, thank you, Mr. Malik, for being here today and going over these complicated matters, because it is not easy for us to even deal with taxes. And now it's like this whole thing has kind of hit us. And so I want to thank you for being here today.
I appreciate the opportunity to be here also.
Awesome. So listen, guys, we're back. Power Attorney is back. We are on track. We have some fabulous guests coming up the remainder of this week. So continue to be on the lookout. Make sure you join us 9 a.m. Central Standard Time, Monday through Friday. If you have questions in the meantime, you can reach out to me at www.latanyamore.com. That's www.latanyamore.com. And so until tomorrow, guys, have a great day.